Welcome to the Treasury Update podcast, presented by Strategic Treasurer, your source for interesting Treasury news, analysis, and insights in your car, at the gym, or wherever you decide to tune in. So for today's podcast, I wanted to get an understanding about embedded Treasury. What do you mean by embedded finance, banking, and Treasury?
Embedded is a description of a process that is seamless. It might be transacting in context, from a banking perspective or a treasury perspective. And this would be set apart or compared to disjointed activities and systems. Yeah, let me give an example. So embedded would be different from disjointed or separate processes, or separate and discrete finance or banking or treasury. One example of this would be how moving around in vehicles that are driven by other people took place. So it wasn't that long ago where you'd get into a taxi. You may hail a taxi if you're in a city. You raise your hand, they pull over. You tell them where they go. They drive you to the location. Perhaps they take a direct route. Maybe they don't. When you pull over, you got to hand them cash, or maybe they had a credit card machine on the back of their headrest, and you punch that in. Maybe they've even covered it up with a coat saying it doesn't work. But so you have to do all that. And then they give you this little printed receipt that's about the size of a postage stamp. And you try to stick it in your pocket as you scramble out of the cab in the rain to some other location. Everything was very disjointed there. Everything was disconnected. When you think about embedded banking or embedded transactions, well, now in your rideshare app, you see where the cab is, or you see where the rideshare is, where they're coming. You even know who's coming to pick you up. When you get in, they already know where you're going, and you may talk with them or maybe not. When you get there, you step out, you have a greeting. You don't have to do anything. All you do is poke the amount of tip you want to leave them, and your receipt goes to your email or goes to your assistant who's going to book those items. That's all seamless. And so embedded finance or embedded banking or embedded treasury is just incorporating these so that as you act, and as you transact, that's all in context of what you're doing. It's not separate or disjointed. And this is usually accomplished by using APIs to make these types of experiences more seamless.
Great. What are some of the key activities or developments that have led us to these terms and these concepts?
Yeah, so what brought this about? Well, I think some of it, Nicki, is that over time, technology has changed. We have better ways of connecting. We've gone from very difficult ways of sharing data, whether it's through file transfer protocols or more legacy APIs to better APIs. There's been some regulations like PSD2 or Payment Services Directive 2, which required banks to support APIs for transactions, providing a regulatory framework to basically force the opportunity for more innovation. And while that may be related to a particular region of Europe, that type of mindset is also spread from a purely competitive standpoint. This view, a more integrated mindset and expectation, comes about from our personal experiences as well, like apps on our smartphones, like I was talking to you about rideshare. It pulls in other data, other services. They become seamless and integrated, almost behind the scenes for these activities. So our development, our expectations, regulations, and just advances in tech are all helping these to become reality.
Great. Thank you. Why should we care about this? What's important about this?
People care about this because an embedded experience matters for efficiency as well as control. And while on the consumer side, we may not care about controls as much as long as we have control of our cell phone, for example. On the corporate side, efficiency matters, as does control, as does other services and other features that we may need to accomplish. And so we care about it because these types of technological changes and process changes support better services, increased innovation. We might have some transaction, but the settlement of it with payments can be very discrete or treated separately, whereas we can have those embedded. You have a contract that has payment terms, well, that could become embedded in the contract, and payments will move when certain events are triggered. Better integration matters in a lot of ways. For corporate treasury or treasury teams, this can matter from a recruiting or retention perspective. You need to have employees that care and want to do things with good technology. And younger workers don't put up with as much nonsense as people who may reflect on things when they were worse in terms of how you had to accomplish them. The ability to focus on more important non-operational tasks is immensely freeing. It's not only an efficiency play, it helps turn and unleash your teams to be far more strategic and more tactical in different areas. So it's an expectation, it's a requirement for staffing, it's a requirement for growth. From a banking perspective, Nicki, I think about two areas, at least briefly: transactional and relationship or strategic. On the transactional side, you want to be in the transactions as a banking partner and the mind of your customers, to give them the data, make it easier to do business with you in a seamless way. And from a relationship perspective, reducing friction, being able to add insight, add other values helps the bank be a better partner. If you're a better partner, you'll have more mind share, you'll get more wallet share, you'll just be easier to transact with, and everyone's looking for points of differentiation. If you're a technology firm, this matters heavily to you as well. I mean, it leads to faster adoption of your services, broader adoption. It adds more value to your solution set, and that value increases over time. Changing that perspective of an asset that decreases over time to one that increases over time is only accomplished by being able to do more things more easily, so you're constantly adding value. So those are some of the reasons that we should care about that no matter what seat we're sitting in.
Great. What is the status on embedded treasury?
That's probably your hardest question today. I'll talk about them generally. So for banks and fintechs, I would describe that as it's a rapidly maturing concept. Maybe they're at the preteen level. Banks and fintechs are doing some things. Certainly on the conceptual side, some are quite advanced. Others are a little farther behind. So on an operational standpoint, that range of thinking can be very early stages to some are actually operationalizing it. And we see this area as something that's moving very, very quickly. As we look at the next 2 years, this is going to bring dramatic change. And some may think that this appeared out of the ether, but that's definitely not the case. Many things, technology, expectations, regulations, demand for efficiencies, those are all aligning and driving us in this direction. And yet there's a lot more work that's needed in embedded treasury and embedded banking for those groups of people. Here's some examples of things that companies are already doing. One is integrated information reporting, balances, transactional data, not just on a prior day basis, but on a current or near real-time basis, can flow into your accounting system, your ERP, a treasury platform, a transaction system, or a company-developed app by leveraging the API library. So I can see my balances when I need them or whenever I want to. The same thing can be said for payments. We gave examples on the consumer side for integrated payments when we were talking about that earlier, but making payments be far more embedded in the process, whether it's in a smart contract or a simple, easily executed transaction with all the required controls that are there. Validations of bank owners, account information, verification, confirmation, all that can be embedded, whether it's using APIs or some other method. People know the transaction as it occurs. Maybe I want to know every time something's successful. Maybe I want to know if something's delayed. Whether we see that with embedded information with package delivery, like we know where the stuff is. It's left the warehouse. It's on the truck. It's now on your front porch. Same thing with payments, with transactions, with activity. And the list continues, Nicki, whether we think about account management, integrating with ERP systems, data providers, having data be where we need it. We don't just want to know that we have data somewhere. We want it to be accessible. So there is a lot of room to grow in this area, but conceptually it's moving along nicely, and there are certainly some examples in the wild, in the real world, that's making a difference in the lives of bankers, corporate treasury, and other areas and other organizations.
Thank you. All of your examples are very helpful. Do you have any final thoughts?
No, Nicki, I appreciate the time asking these questions and talking on it. I do think there's certainly a lot more topics we can explore on future podcasts and with other speakers as well. So thanks for talking through embedded Treasury basics with me.
Great. Thank you so much.
You've reached the end of another episode of the Treasury Update podcast. Be sure to follow Strategic Treasurer on LinkedIn. Just search for Strategic Treasurer. This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.